a great presentation. I said that probably 5 times today out of 4 presenters, but Jonathan Rose is going to be talking to us today. He's been a frequent guest at the Online Traders Summit. I really like the way he presents stuff as well. You're seeing a pattern, but I invite people that I like to the workshop today. So I'm going to go ahead and I'm going to bring him on here. And Jonathan, I'm trying to turn on your audio, but you're going to have to turn it on by yourself, Jonathan.
Hey, Jeff, can you hear me?
I can hear you. I'm going to go ahead and start setting you up. Is there anything you want to share with the group today while we get you going?
As far as I'd like to share my screen.
Yeah, you'd like to share your screen? That sounds like a good one. I see the presenter view.
How's that?
That's not the presenter view, though. It looks a lot better.
Yeah. There we look good.
All right, John, I'm just going to let you go. Get out of the way.
Fantastic. Thanks, Jeff. I appreciate being here, and thanks for the kind words. All right, so that was awesome. So welcome, everyone. My name is Jonathan Rose. Today I'm going to be talking about my flagship product. It's called Swinging for the Fences. And this is the foundational course for exactly how I teach options, exactly how I trade options. Probably heard a few risk disclaimers today, so probably don't need to do another one of these. So I'm going to be talking about stock options. I'm going to be talking about how to find and buy inexpensive stock options. Okay, who is this for? Anyone who's committed to make trading work. For anyone genuinely looking to put in the work and learn how to trade correctly. Trading's not easy. There are no shortcuts. And also, if you're looking for a consistent approach to trading, welcome. What I'm going to show you, and I'll probably go for 45, 50 minutes, open up for questions at the end. How to avoid huge losing trades that offset a series of winning trades. How we can find our edge so you can trade consistently and confidently. And then how to manage your trading portfolio in any market conditions with a disciplined, consistent approach. We'll talk about how to trade options as they were intended to be traded. How to scan for trades that accurately reflect your market position. How not to trade scared. And also, many people have trouble trading in the past. We're going to talk about moving forward. One of the most powerful theories in economics, sunken cost theory. So just because you spent a whole bunch of money or committed a whole bunch of time in the past, if it's not working, I strongly suggest you stop, reevaluate where you're at, and if you need to start over, you start over. My big promise today is I'm going to show you what you need to trade more confidently than you ever traded before. I'm going to break down a proven approach step by step so you can use it to build your trading foundation. And when we're done here, you're going to see how it's absolutely possible, but you'll also see that I'm willing to help you as long as you need. I just want to be super, super clear. What I'm about to show you requires hard work. This is my profession. I trade for a living. This is not something you're going to learn in 2 days or 3 days. You must be open and committed. And finally, I'm going to share some results. I'm going to share some case studies, but they're not necessarily typical. The people that I'm going to show you committed to doing this and put in the work. So let me ask you a few questions, but while I'm asking you those questions, if everybody could put in the chat their comfortability with options, and let's do it between 1 and 5. And 1 is what's a put, what's a call, I have no idea. And 5 is I could be a market maker, I could value options to the penny. So this will really help me as I go to the educational component of the presentation, kind of what pace that I should be at. So 1, what's a call, what's a put? 5, I could be a market maker if I want to. 3 kind of caught in the middle. So somewhere between 1 and 5, that'll be really helpful. Let me ask you a few questions as you're going through, and I appreciate everyone participating. Do some of you begin each month feeling like you're trading better? Maybe you even feel close, but your account tells a different story. Do some of you feel like nothing will stop if you learn correctly, but up until now, the information that you've come across is kind of generic, kind of the same stuff? Some of you get out of trades too quickly. Get out of the winners and hold on to the losers too long? Anyone feel scared in the market? Maybe you took a big hit. Maybe you're realizing how foolish and unprepared you might have been in the past. Some of you just feel burnt out, maybe getting to the end of your rope. Keep trying to figure out this trading thing, but nothing seems to work. If you can relate to any of these, I have some good news for you. These are just the symptoms of a problem that you can fix by implementing a few things. And in this presentation, I'm going to refer to those few things as the 3 pillars. Before I do that, I want to do a little bit more of a formal introduction. My name is Jonathan Rose. I started trading in 1997 when I graduated college. I moved up to Chicago. I was a floor trader on the Chicago Mercantile Exchange, trading NASDAQ futures and S&P futures. I did that from 1997 to 2003. 2003, the Fed was just starting to raise interest rates. I'm a big believer in trading. You want to go where the action is. Because the Fed was starting to move interest rates in 2003, I switched over to a firm that was starting that trades bond futures. I was the 6th employee of that firm in 2003. In 2010, we had 200 employees, and we sold it to a major hedge fund in the Chicago area. After that, I was under a non-compete. I took a year off. I like to do endurance events. I did the Ironman. When I came back, I put 350 grand into an account and went to go be a market maker on the floor of the Chicago Board Options Exchange, because at that time, options were experiencing just tremendous growth. And that's where the action was in Chicago. And again, in trading, you want to be where the action is. I grew up on the East Coast, figured I'd always go back to New Jersey or New York. Chicago ended up working out well. Met my beautiful wife, had these 2 great kids. Life is good, okay? This is what drives me right there, the 3 of them. I got into retail education at the end of 2015. I got into retail education because I was watching videos online, and some of the content that I was coming across, I just felt was kind of silly. And then the more videos I watched, the more kind of angry I would get and the more motivated I got, because I really felt there was a void in the market for real education. Because everything that I was coming across, following the trend, charts never lie, just trade the breakout, trade the trend. If you can't trade the trend, trade the micro trend. And if you can't trade the micro trend, maybe try the micro trend. Candlesticks, Ichimoku, Gann. I've been trading professionally for 18 years. It's all I've ever done. Past the first level of my CFA. I've never heard of a lot of things that all these traders are presenting on. That's when I knew there was a big void in the market for just professional level education. And that's what I want to bring to you. One of my favorite quotes, risk comes from not knowing what the heck you're doing. And that's really the overall risks in the market. I start working with people, option traders, who have told me they've spent $10,000 on their options education, but yet they've never learned how to properly manage their position. They don't even realize things that are available to them in the market that they can do. For instance, what about trading options after the close? Can we do that? Can we manage our options position after the close? Most people think no. Options close. You can trade stock after, but you can't trade options. We get a lot of this. Play around with it. It took me a while. It's not going to happen in 2 or 3 days, but it works. Let me go through an example on how you can manage your options after the close. Let's say in this example, ABC stock, a phony baloney stock, an earnings trade. Let's say we're long the 20 strike calls. Maybe we're long, it's trading for $2. We buy a 10 lot, that's $2,000 worth of risk. If the earnings comes out after the close, let's say the stock closed at 20, 4 o'clock Eastern time, market closes. Overnight, the stock runs up, and in the morning, it comes right back. The person who doesn't manage their options after the close, the person who doesn't realize that you can manage your options after the close, goes home, his options are worth $2,000. He comes in the next day, his options are worth $1,000. The stock closed at 20 and it opened at 20. The darn thing didn't move. But what about the educated person? What about the fellow who sits there after the close because he has risk? He invested $2,000 of his hard-earned money, so he's going to do whatever he can to manage that position. That guy, 415, he sold 500 shares at 25 when the stock spiked. Maybe in the morning he sold 500 shares at 27. He came back in just like the first fella, stock's trading 20, but the difference is instead of being a 50% loser, this guy's up $6,000. The only difference between those two examples is the first guy didn't realize that you can manage your positions like this, and the second one is educated. When I work for a proprietary trading firm, if a trader had a position on at 4 o'clock and there was options after the close, and they decided to go to the gym and go work out and do whatever kids do, comes back the next day, loses 50%, but yet he could have made $6,000 by sitting there and selling stock, that guy would get fired. Without a doubt, because proprietary trading firms, you are trading the firm's money. And I don't want anybody trading my money or the firm's money who is not going to sit there and take advantage of this kind of movement. This is how you educate yourself, seeing things like this that are available to traders in the market. Here's Phil here. It's been a long road trying to find someone who's professional, caring, honest, and trustworthy. I found all that in you. The importance of excellent support cannot be overemphasized. What I'm focused on is long-term relationships with my clients. That's what my whole business is about, is once I work with people, I'm looking for long-term commitments. I want to give you total clarity on what you should be focusing on, okay? It pains me to see so many traders start learning, and once they learn from me, they realize how foolish and unprepared they've been in the past. So I laid out 3 pillars that I believe you need to be successful in trading, especially trading the options market. Before I explain the pillars, I want you to understand the majority of traders I meet with have been misled in their trading education. Many more have been deceived. I want to teach you things that are objective, okay? This is not just my opinion. I want to teach you facts about the options market. For instance, managing your options after the close by using stock. The first pillar is going to be position management. I'll get into all the questions at the end, guys. Learning to manage your options position is a necessity. It's an absolute requirement for any options trader. Let me show you another example about managing your options position. ABC stock, another phony baloney stock. Stock's at 10, January 1st. 12 strike calls are trading for 40 cents. Let's all buy 10. If we buy 10 of these, of the 12 strike calls for 40 cents, we have $400 of risk. For those who have no options experience, for my ones out there, if the stock's at 10 and you buy 10 of the 12 strike calls, what you're doing is you're buying 1,000 shares of the underlying stock at 12. That's all you're doing. People make options so complicated. If the stock's at 10 and you buy 10 of the 12 strike calls, you're buying 1,000 shares at 12. Why would you buy 1,000 shares at 12 when the stock's trading at 10? Because you get awesome leverage to do that. You can never lose more than the $400 you invest. But if the stock goes from 10 to 11 to 12 to 13 to 14, if you want to take off your risk, if you want to lock in your profit when the stock's at 14, many will just go and sell their options. Fine. Sell your options. You're going to take off risk. Not a bad do. The other thing you can do is you can roll it into a spread. That needs to be learned. What I like to do, the biggest improvement I see with the clients that I work with is I want to sell stock. If I'm long 10 of the 12 strike calls, I'm long 1,000 shares from 12 at expiration. That's my position. So what I can do before that is if the stock's at 14, I could sell 1,000 shares of stock. Now I'm long 10 of the 12 strike calls. I'm short 1,000 shares of stock at 14. I have no more risk. I have zero risk. If the stock goes to 100, it doesn't matter. I already covered my position. I'm long 1,000 shares from 12. I'm short 1,000 shares at 14. Why do I want you doing this? Or why do I want you learning that you can do this? Let's say there's 10 days to go until expiration. If you're long 10 of the 12 strike calls, you're up $2, it goes to 14. You sell your options, great trade, virtual fist bump to you. But what about the person who sells 1,000 shares? 10 days to go before expiration. They have the same no risk, just like the person who covered their trade, except what happens if ABC has accounting problems in that next 10 days and the SEC announces that they're under investigation? Maybe their CEO says they're going to get bought out at 420 or something silly like that. Stock plummets. Well, the person who sold 1,000 shares who had zero risk can buy those 1,000 shares back. They make $9,000 that you wouldn't have made if you just covered your options. You don't want to give up your optionality. It needs to be learned, but once you learn this, it's a very, very powerful way of trading. What this is called, managing your underlying position by using stock, it's called scalping gamma. Scalping gamma. There are 3 ways to manage your options position. Get it out, just cover your position. Roll it into a spread. And finally, scalp gamma. Thank you very much for teaching me how to scalp gamma. It's amazing how you manage your positions. I've never heard about this. I was subscribed to a lot of different services. Only yours gave me great education. Number 2 is going to be money management. Let's go through another example. Let's say you own 4 positions. You own Microsoft, you own Google, you own Tesla, you own Amazon. Too many people will look at this as 4 positions. I want you to look at this as 1 position. If I'm going to be analogous, think about the mutual fund that you own. I'm sure you own a mutual fund in your retirement account, whatever. If you want to see the performance of that mutual fund, are you going to look up the mutual fund and then look under the hood at all the different holdings, or do you not care at all? All you care about is the overall performance of that fund. Traders, more retail traders, will look at this as having 4 positions. It's not 4 positions. You have 1 position. You want to manage your portfolio. You want to manage your account like it's a basket of stocks that you hold, and you're managing it like it's a fund. I don't want 4 positions that are all long. They're all the same thing. All of a sudden, if Microsoft, Google, and Tesla are up 10% and Amazon's down 20%, what traders do is they're going to cover the good stuff and hold the garbage. If you look at everything from a portfolio perspective, you're not going to get caught in that trap. It's 1 position. With my coaching clients, I like to refer to this silly cartoon. Sure glad the hole isn't at our end of the boat. Well, if you have 4 positions and 3 of them are working great and 1 of them is killing you, you better believe that hole is on your side of the boat. Long-term relationships. I'm happy. I finally found a home. I'm in it for the long term. The next pillar is confidence. And this is true in trading. It's true in business. It's true in sports. You need to believe. And how do you get confidence, right? You can't just turn a switch and say, fine, I'm going to try going to trade and I'm going to be confident starting Monday. No, you get confidence from rules, by having boundaries, education, hard work, your performance proving it to yourself that you're trading better is going to give you confidence. Finding confidence in learning why you're in a trade. I'm going to call it finding your why. Too many of my clients come to me just using technical analysis alone. They'll look at a chart, they'll be willing to buy it, they'll be willing to sell it, only looking at technicals. I'll never do that. I always want to have a reason to be in a trade. Here's an example of finding your why. NPR, All Things Considered, May 17th, comes out with an article, California to require all new homes to have solar panels starting in 2020. Interesting. There's new legislation that's passed starting in 2020. All homes in California will be required to have solar panels. That is interesting. That is going to move certain industries. Which industries? Well, obviously solar producers, especially people who produce solar in the US because of tariffs, but also solar installers on the West Coast. This article came out May 17th, 2018. The two names, after doing quite a bit of research that I found, Run and Whistler. The article again, May 17th. May 17th for Run, RUN, trading $11, rallies up to 16. Whistler, May 17th, trading 4, rallies up to 580. The benefit to having a thesis and to having a why is we're no longer trading from both sides of the market. You're not looking to buy, you're not looking to sell. You're looking to buy in this scenario. In certain scenarios, if it's bearish, we'd be looking to sell, but we're looking to trade the market from one side. I sent this alert out to my members June 12th, right here. That's when Run was running. And it said, if you own Run, you can consider locking in a massive profit and use the winnings to add to Whistler 5-strike calls for 25 cents. Okay, June 12th is going to be right here, but June 12th, you'll see here, Whistler hadn't run yet. Okay, what we're looking to do, the 5-strike calls for 25 cents. You buy a 10 lot, $250 of risk, you can never lose more. I know on these things, everyone's skeptical, rightfully so, you should be. I wanted to share the exact trades starting 5:15 all the way up to the end of May. Buying Whistler calls for 20 cents, 35 cents, a dime, selling them for $1.20, $1.30. Okay, 2,000 bucks on the trade, pretty straightforward. Finding a why, find a catalyst. This next example is another example of finding your why. This is something that you don't learn in books. This is something that you learn from the School of Hard Knocks. It's called a lockup trade. Is anybody familiar with how lockup trades work? When a company has an IPO, an investment bank takes them public and they have restricted stock. Every single company that has an IPO has restricted stock. I'll walk you through an example of LAUR, Laureate Education. LAUR IPO'd February 8th. When they IPO'd, there was 35 million shares that were available to trade. They lock up shares for 6 months, and they lock up shares so when investment banks or private equity invests in the company, as soon as it goes public, they don't sell all the shares and crush the price down. So they lock up shares for 6 months. When they originally came public, 35 million shares were available to trade. 6 months after being public, 133 million shares that were previously restricted, that were previously unavailable to sell, would be available to trade. Average daily volume of LAUR, it's only 300,000 shares. Share to trade idea July 13th. Let me walk you through how this works. And let's use the example of Laureate Education. Let's say that we're a teacher that got tenure and we're getting a bonus of $100,000. Okay? Professor Gibby, you get a $100,000 bonus. The only thing is you're getting restricted stock. You can't sell your shares for 6 months after. Congratulations, though, it's your bonus. So IPO 35 million shares. Professor Gibby gets his $100,000 bonus in shares. It rallies a little bit, gets up to 15. That 100,000 is worth about 120. We want to sell, but sorry, you're not allowed to sell because your shares are restricted. It goes back down, bummer. but then it starts rallying. We get excited because 120, 140,000, 150,000. Trade ideas shared with the membership, lockup. Lockup 133 million shares that were previously restricted are now available to sell. If we owned $100,000 worth of LAUR at $12 and it was trading at 17, you think we'd sell some, or you think we'd continue holding it, waiting for it to trade 19? We'd probably sell that darn thing, right? Take our bonus, because we would have rather the bonus in cash anyway. What happens with these lockups is there is an avalanche of supply coming, and there's not the demand to meet that supply. This happens in IPOs. LAUR, Roku IPO'd, rallied like crazy, went all the way to 58 bucks. Lockup got crushed. Ended up rallying since. Roku's a good, strong company, but that's how these lockups behave. Luis here bought 30 contracts, makes $17,000 on a lockup trade. Vinter had its IPO, same thing, rallies like crazy, comes off, rallies, lockup, sells off. Oh, I think, can you guys still hear me? Sorry about that, my PowerPoint just crashed. You guys can still hear me okay? Good. Give me a sec, I'll just pull it back up. Sorry about that, guys. Not a very nice PowerPoint. Give me 1 second. So as I go through this, I'll answer, I had some questions before about how do we trade options after the close. So you can't trade options after the close, but you can manage your position after the close. There we go. There you go. All right, we're back up. You guys can hear me okay? See the screen okay? There we go. So the idea about the lockups is that it makes sense, right? It's not support and resistance, okay? It's supply and demand. And that's what we're looking for. Now, Jonathan, you got lots of slides. Okay, so what I want you to understand is that Laureate Education here, somebody might look at that and say, you know what? It's a double bottom. We should be in a trade because it's a double bottom. But what they don't realize is the avalanche of supply coming to the market. I also want to ask you this. If you're trading based upon double bottoms, as an example, or triple tops, I have a 9-year-old. If I sat my 9-year-old down and said, hey, Asher, I want to teach you something. It's a concept that many people risk their hard-earned money on. It's called a double bottom. How long would it take me to teach my 9-year-old what a double bottom is? Not too long, right? But yet people are risking their hard-earned money on something as straightforward as that. That's what the perspective that I want to give you. Roku, Vinter, Steven take 100% profit, 100% profit, okay? Very, very reliable trades. I always want to show you lots and lots and lots of proof. Vinter, Send, LAUR, okay? Really, really reliable trades. This one I thought was a lot of fun. This is C, 33-year-old from Canada. Lockup this morning is my 14th winner. She was 14 for her first 14. This is great. Sorry about that. I am going down again. Okay, so I'll just keep talking, but the whole idea, guys, is that we want to find trades with an idea behind those trades, okay? Rather than just use plain simple, straightforward technical analysis. We want to get a little bit more sophisticated than that. Okay, and I'm going to keep the questions up too, just in case this thing goes down. Now the question is, can you buy the company that just had its IPO? Sure, but why would you want to? Okay, because IPOs rally after, that's not a reason. Every trade that we do needs to have a reason behind why we're doing that trade. Okay, and something like this, why get cute with it? Just because you see it on a chart that it rallies, the lockups make sense. The lockups, there is a supply and demand imbalance. They make sense. See here, 14 for 14. Very, very cool. Has anybody ever learned or been taught that they should never trade options? I see a lot of people who come to me and say, Jonathan, I learned I should never trade options. It's too dangerous. We should only sell options. Let me show you the difference between buying and selling options. When you buy options, you're going to lose money more often than you're going to make money. You might lose 60 to 90% of the time, but when you win, you're going to win more than you lose. That's the whole idea. When you buy options, you know exactly what your risk is. When you buy options, you're long volatility, you're long movement. When you sell options, when you sell a strangle, when you sell a credit, any kind of credit, you're short volatility. You don't want movement. You want it to hibernate. You want things to fall asleep. Okay? When you sell options, you're going to make money more often than not. The scariest trading strategy that I can think of is a trading strategy that makes money 90% of the time. If a trading strategy makes money 90% of the time, you should be terrified of that 10%. The great thing about learning how to properly value and buy options is you can always know exactly what your risk is. I'm going to skip this slide. Does anybody know what these 5 things are? For options valuation, I have 5 things in front of you. To value options, the majority of the street uses the Black-Scholes model. The Black-Scholes model sounds really complicated, but there's only 5 inputs that go into the Black-Scholes model. They're in front of you. For the Black-Scholes model, you need the underlying stock price. You need the option strike price. You need to know how much time until expiration. You need to know what the interest rate is. The only thing that we need to know that is not given to us, that's not objective, that's not given to us by the market, is volatility. Volatility is the only subjective component. The other 4 are objective. It's given to us. If you're trading options without understanding volatility, I hope this slide gives you perspective on what a difficult situation you're in. Les, isn't it true that interest rate has a minimum impact on volatility? Les, that is true. Short term, I would ignore rho. Don't worry about interest rate. Volatility. I want to walk you through an example. ABC stock, same exact stock. On the left is 30% vol, on the right is 70% vol. Same stock. On the left is going to be like Microsoft, on the right is a solar stock. Stock's at 20, 30 days to go until expiration. The low vol stock, $2 higher is priced at a dime, $4 is 0. The high vol stock, $2 higher is 80 cents, $4 higher is 30 cents. On the left here, because it's a low volatility stock that doesn't move very much, maybe that stock's trade between 19 and 21 and it has for the last 6 months. The market is pricing in a 0% probability that that stock gets to 24 by expiration. That's why I valued it at 0. it doesn't mean that there's actually a 0% probability. The market is pricing in a 0% probability. On the right here, 30 cents, the market's pricing in some likelihood of the stock getting to 24. 22 calls here are 80 cents. 22 calls are 10 cents. The only difference between these is the volatility, the likelihood that a stock could get to those strikes. Over here on the right, you'll see 22 calls, 80 cents, 24 calls, 30 cents, $2 lower, $1, $4 lower, 70 cents. Can anybody tell me why I made those puts more expensive than the calls? Why are those puts $2 lower, $1, but if you go $2 higher, it's only 80 cents? $4 lower, it's 70 cents. $4 higher, it's 30 cents. Why is it like that? Kind of short on time, so I'm going to jump in there before you guys all come back with answers. Good feedback. Something I hear most often is stocks go down faster than they go up. I call BS on that. I think that's just something that people say about the stock market. I don't think it's true. Stocks go down faster than they go up. The reason it's like that, and I was a market maker for 5 years. As a market maker, I know two pieces of information that are very valuable. I know the two most popular option strategies for retail traders. The two most popular option strategies is one, covered calls. Buying stock, selling upside options. I know people want to sell upside options, so I'm going to make those cheap because I want all the edge I can as a 3D market maker. I also know that people want to buy puts because they believe that stocks go down faster than they go higher. They want to protect their portfolio. So market makers are going to make those puts as expensive as people are willing to buy them for. They want all the edge. So when you look at an options tree, you'll notice that usually the downside is much more expensive than the upside. There are some sectors or industries that have more expensive calls than puts. Biotech comes to mind. I'm guessing the last trade that you did in biotech was buying upside calls. So market makers make those upside calls more expensive than downside puts. It's just common sense. Everybody wants edge. That's why that's created like that. That's called skew, S-K-E-W. Already went through that slide. This was very cool. Out of nowhere, Jim Cramer reached out to a good buddy of mine, knowing that he knew me, and sent these awesome emails. Came across my content. I don't know Jim at all. This guy's great. Wow, this guy's amazing. Tell him I want to be on his podcast. We're reviewing your guy at the highest level. I think he's a star. Very flattered. Cramer reaches out, asked to be on the podcast. I didn't have a podcast, but when Jim Cramer reaches out to be in your podcast, naturally, I found it appropriate to start a podcast. So that was very, very exciting. That just came out of nowhere, so pretty excited to share that. 3 pillars: position management, money management, find your confidence. Find yourself in your trading. Let your personality come out in your trading. Find your why. Be curious. Look for really cool stories. Don't just depend on technical analysis alone. Technicals should be one feather in your cap for any successful trader. Today, I promised you a few things. For one, I wanted to show you the only things you'll need to be a successful options trader or just trader. I really wanted to stress the importance of position and money management. And I also want to show you that it's absolutely possible to find low risk, high reward trade opportunities. What I want to do now is I have about 15 minutes. I want to take about 10 minutes, walk you through the Swinging for the Fences options program. We call it the Option Program for Success. And then I'll have 5 minutes after that to go through any questions you have. The reason this is my most popular program, why 80% of my members are in this program. When I first announced this program, it included a live class at the end of the month, the last Wednesday of every month. But in talking with my members, one of their main concerns was they learned something, but then they're on their own. There's no follow-up. They feel like someone's taking their money and then they lose contact with them. So for this program, anyone who's part of this program, you get a live class on options the last Wednesday of every month for as long as you would like to come to them, forever. So I have people who have been coming to this class for 18 straight months. Last Wednesday of every month, we do an options class. We're going to scan for trades, find different trades. We're gonna do lessons like skew, do lessons on volatility, do lessons on unusual options activity. What's the value for this? Depends how many classes you go to, I guess. But again, live options training last Wednesday of every month. The benefits, well, it's defined risk. You're buying options, you know exactly where your risk is. An option's 25 cents, you can buy 10 for $250. You can never lose more. You can buy 5, it's $125. You can never lose more. Continued education, keep learning, keep pressing forward. If you're trading options and you don't realize what's available to you to manage your position, that's low-hanging fruit for you. Those are lessons you need to learn. Trade idea generation, set it and forget it. Once you put the trade on, we're in it till expiration. If you buy an option for 25 cents, there is no stop. Straightforward. It's going to protect you because we're buying calls, we're buying puts. If volatility shoots up, you're long volatility. And this is the foundation to trade options forever. It's how I learned. It's how I teach options. Paul here sent me an awesome video. 2 things really stood out to me in the video. For one, his relatively small account started at 6,000. It's now at 11,000. But the second thing is he's not staring at all those screens behind him. He's out having lunch. He's playing golf. Do the research, put your trade on, and then let the market do what the market's going to do. That's how the program works. You get a live class the last Wednesday of every month forever. Now I want to go through some bonuses. Okay? I want to put a lot of bonuses in front of you because I want to be with you on this journey. So the first bonus is going to be a 2-hour video. Start watching it now. It'll teach you to scan for these trades, find the industries that are in play. Right now, you want to know what industries or what sector is the most volatile and where we're buying options? Emerging markets, Brazil, Argentina. Those have the highest vol of anywhere in the market. That's where we're buying little options right now. And then manage option trades like a market maker. So a 2-hour option training is going to be the first bonus. Who is this for? Losing trades, offsetting winning trades. Maybe you're just frustrated. You're out there banging your head. You need focus and direction. Done chasing the next shiny object. No more indicators. No more indicators telling you to buy or to sell. Do your own work. You're willing to do your part, and you're looking for a home. So to recap the offer, you get the live options class the last Wednesday of every month. You get the first bonus 2-hour option success course. The second bonus is going to be another hour workshop, 3 ways to manage your options position. Learn how to manage options using stock. Learn how to manage options using spread. Okay? So what you get, those live options classes the last Wednesday of every single month for as long as you like. First bonus is a 2-hour option success course. Second bonus is a 1-hour scalping gamma position management workshop. What's the catch? Why are you doing this? There is none. I believe that I can teach you options better than anyone else that I've seen. I know from talking with my clients, the biggest thing that they want is to keep coming to classes and to keep learning, to keep having a place where they can ask questions. That's why I do it like this. I sent out a survey asking people who have taken the Swinging for the Fences options program, what do they think? What's their favorite aspect? 32 people responded. These are their 32 responses. 32 out of 32 are positive. Learning to scalp gamma, lifetime, feeling confidence, big money potential, clarity, another way to look up the markets, consistency, Jonathan's honesty and passion, the Q&A and review, learning to fish on your own, playing volatility, no BS. This is not a trick. This is not the next shiny object. We're learning foundational options lessons. I would like to say you have two choices. Continue doing what you've been doing up until now, ignore this advice, and two, you can act and commit to a new way of approaching the markets. What I'd like you to do, is think what you value this opportunity at. Unlimited classes the last Wednesday of every month from our professional market making. It's a one-time payment. And I have one more bonus for anyone who moves forward while we're live, or actually before Sunday. So the program is not $497, it's a $297 one-time payment. You get that live options class. The special bonus is going to be a 60-minute lockup workshop. But I'm also, for anyone who moves forward before Sunday, I'm going to send you a video with my favorite lockup trade right now, so you can be actionable Monday. So you get 4 hours, and then you'll get my favorite lockup trade right now, and then you'll get an invitation for a live options class the last Wednesday of every month. Okay? It's activedaytrader.com/swing. I also want you to know that there is a 100% guaranteed money back guarantee after 30 days. So within 30 days, if you join us, if you don't like the sound of my voice, if you don't like how my videos are produced, or for whatever reason, you're welcome to return it. If it doesn't work for you, it absolutely doesn't work for me. Okay? So that's going to be activedaytrader.com/swing. My good friend Jeffrey Gibby just threw it in the chat. And now I'd like to go back and answer whatever questions that you have. Okay? So Vic, as far as the lockup trade, that needs to be learned. So these kind of trades, like a lockup trade, you're not going to learn that in a book. That's learning from the school of hard knocks. But the real takeaway from that is I want you to understand the why. I want you to understand why the stock rallies after the IPO. The investment banking community will support that with a floor. And then after 6 months, the thought is, you're on your own. Let's see if you can actually swim. And so that's why the trade opportunity presents. It's not that you can do it with every single lockup or every single IPO. You do need to learn it. Okay? Steve, again, everything in the lockup is taught in the class. Hey, Les, the question is, are you mostly betting midterm, or are you also betting intraday? So great question. Another thing that I've realized once I started working with retail traders is people like to define themselves. They like to call themselves a swing trader or a momentum trader, an SPX options trader. All I care about is account growth. I want to manage the big picture. When volatility is high, there's more opportunity intraday. When volatility is low, you're going to find yourself building positions more and holding things a little bit longer. Throughout my career, I've never cared whether I make money trading S&P futures, whether I make money trading biotech options, or I make money trading peanut butter and jelly spreads. We are looking to build our trading account. So I look for opportunity of good risk reward, somewhere where we can find good stories. I do a lot of research. I want to find those stories and then find the most efficient way to express my opinion in the market. Okay? Dimitri is asking, how many option strategies do you use? I use every single one. But the difference between me is I didn't even know what an iron condor was until I started Active Day Trader and started teaching retail traders. I don't know what any of these names are. I trade volatility. When I'm looking at an options trade, options are either expensive or they're inexpensive. Different strikes are either expensive or they're inexpensive. I care about my risk. I care about managing my Greeks, but whatever spread I end up in, I don't call it a Christmas tree. I just call it long the 30s and I'm short the 32s. I'm managing money. Hey Shirley, it's $297 one-time payment. This is not reoccurring. After a full year, you would have 12 hours of options training, very similar to the 10 minutes or so we covered in the middle of this presentation. It's a one-time payment. I do this because I want you to stay with me. I want you to know that it's not constantly getting upcharged. Once you're part of the program, you're part of the program. Mark is asking, how do you sell your options before the market opens? You manage your options using stock. So Mark, if you own the 12 strike calls and the underlying spikes up to 14, you can sell stock. You sell stock to manage your options. Your options are stock. If you're long the 12 strike calls 10 times, you're long 1,000 shares from 12. Okay? Hey, John. Interesting question. Good question. So John's saying, I have a stock portfolio consisting of 20 stocks. As part of the class, can I submit these 20 stock symbols to get suggestions on which ones are best suited for options and specific option strategy per stock? So John, if you sent me that email, I would send back an email of why the heck are you in those 20 stocks? And I would ask you to sell me those 20 stocks before we even talk about options, before we even talk about stock. The monthly classes are Wednesday, the last Wednesday of every month, 1 o'clock Eastern time. I'm always going to send out the recording right after it's done. Shirley, you can manage your options after hours using stock. John, equities do trade after hours. Dimitri, once again, how long are you in a trade? It depends. I mean, it's such a tough question, guys. I'm looking to find low-priced options, say that are priced under 50 cents, where we can buy. We know exactly what our risk is, and if we're right, we can make a whole bunch of money. That's what we're looking to do. Okay? John, how do you sell Apple after hours? I would call your broker. Apple trades after hours. You can sell Apple after hours. Okay? And yeah, it's $297. It's a one-time payment. And again, anyone who moves forward while we're live, I'm going to send a video of my best lockup trade right now. It'll probably be like, between 5 and 10 minutes. I haven't even made it yet. I know exactly the name that I'm going to send you, and I'll send you that before the opening on Monday. But overall, my stuff is not giving you fish. I want to teach you. So you go through that lockup presentation, the 60-minute class. By the end of it, you're going to know how to find these lockup trades. You got to practice, play around with it, but you're going to know exactly what we're looking for, where to find them, and why we're in those trades. Lars, welcome, buddy. I look forward to working with you. And again, it's $297. You get all that right now, and you get a 30-day money-back guarantee for no questions asked. Hey, Steve, what if you sell stock after market and stock runs even further? Steve, excellent question. What happens if you're long the 10 of the 12 strike calls? The stock's trading 20. You sell 1,000 shares at 20 and the stock runs up to 100. You're long 1,000 at 12, you're short 1,000 at 20. You make $8. You don't get to participate up to 100, but you took off your risk. Same thing as if you just covered your options position. Dimitri, in my membership, I share trade ideas every Sunday evening. This is the educational component of Active Day Trader. 80% of my members are part of this program. In the membership, every Sunday, I share 8 to 12 trades with you, along with a video explaining each one of those trades. Next question, then I've got to be done because my time is, what percentage of trades are profitable? Let me tell everybody on this. If 10 people take the exact same trade, you will get 10 different results every single time. So the answer to that, what percentage? It's BS. Don't believe anybody. You have to learn how to manage your position. Okay? That's the truth. You guys are awesome. Thank you very much for having me. ActiveDayTrader.com/swing. Jeff, thanks, buddy. I appreciate the love. Thank you, guys.
I have been informed that the audio was muted. I had it muted on the line. All right, you guys should be able to hear me now. I'm going to do that again real quick. I want to thank everybody that's ordered today so far. Parameet, Love, Stephen, Andy, Gunther, David, Triton, Michael, Sarash, Alec, and Orlando, Ross, and Evangelos. I hope I got that last one wrong. Anyway, thanks again. You're going to enjoy Metastock. You're going to love it. I appreciate your order today. In any case, I do want to remind you of the special offer we're doing on the Trader's Toolbox today. We've got all 4 of the add-ons we're going to talk about: Steve Bigelow, Joe Duffy, Adrian Mance, Ichimoku Masters, 2 years of stocks and commodities, 3 months access to Metastock real time, 3 months access to Metastock Zenith, the Metastock boot camp that I'm going to do with you next week, next Thursday at 6 p.m., the Unleash the Power of Metastock course, our one-on-one white glove installation call with one of our support reps. All of this would normally cost you $25.96. If you pick it up here today at the summit, it'll only cost you $15.96. So to take advantage of that, give us a call. The phone number is 800-882-3040. You can also chat online with us at metastock.com/saleschat. And it's an incredible offer for you. You'll be able to try out the software that's been rated #1 in its price category for basically 25 years in a row with that. In addition, you're going to get an institutional strength data feed with news, everything that a broker would basically be allowed to see. What we have here is just such incredible tools, and it's all going to be included with that. So I do want to spend just a minute. Yeah, we're doing pretty good on time today. I was looking at it, seeing how we were doing. But we've got, I do want to thank our sponsor, Stocks and Commodities Magazine, great magazine. I hope you've claimed your free issue either through the registration or through the link that I keep sending out there to you. You should at least check this out. And it does come, you get 2 full years of it with the Traders Action Pack. So if you want to get a hold of us, if you have questions, if you want to get your Traders Action Pack ordered, give us a call. The number again is 800-882-30. Well, let me just go back there. 800-882-3040. I do have that memorized, and that's what I thought it was. I just didn't want to make any mistakes there. Or you can chat online with us at metastock.com/selfchat. Let's get back to this.